This is today's Autochartist stock index market to watch for Thursday, April 12, 2012. On April 10th, the S&P 500 futures contract broke through the support line of a rising wedge chart pattern, completing the pattern and setting up a potential break into the Autochartist forecast level at 1276.50. Since the market was so far from the original top, it is possible that the index became oversold on a short-term basis, thereby temporarily halting the downside selling pressure. This may mean that the index could be setting up for a rally or a retracement back to the 1386 area before resuming the established downtrend. Now, if we go back to the quality indicators, we see that this pattern was a high quality pattern of a solid 8 bars. The initial trend, which measures the strength of the trend prior to the chart pattern formation, is an impressive 10 bars. This, combined with the strong 6-bar breakout, makes this a continuation trend change and gives the stock index a strong bias to the downside. All the stock index seems to be lacking at this time is rising volume and volatility. These are typically two ingredients that drive momentum. If both dry up on a breakout, this usually means that short sellers are unwilling to place new trades this far in the hole and may want to see a retracement before refreshing their original positions. Now, supporting this assessment of the market is the short-term chart, the 240-minute chart, that shows that another move to the downside is possible, and this is based on the Autochartist key level trading tool. Although the S&P index contract is in a clear downtrend because of these lower tops and lower bottoms, the short-term chart seems to be indicating that temporary support may be forming. This is very similar to what we've seen on the 1440-minute chart, and this too indicates that we could see this retracement back up to 1386 before the trend resumes. However, it is also indicating that there is a strong downside bias based on this arrow, and that the key level support line at 1337.50 is certainly a reasonable price target. Now, traders that are leaning to the downside because of the potentially bearish 1440-minute chart have to realize that this 1337.50 area on the 240-minute chart may temporarily stop this market if it begins to break out to the downside, as previously noted. So if we could see this market stop at 1337.50, but once this area is cleared, then we could trade sharply lower into the 1276.50 area. Now, in summary, although there is a strong bias to the downside because of heavy selling pressure earlier in the week, the index may experience a short-term retracement back up to about 1386 because of oversold trading conditions. Once this condition is alleviated, then the market is likely to resume the downtrend. So it's suggested that traders use a combination of the 1440-minute chart for the major downside target at 1276.50, but also incorporate the information on the 240-minute chart to realize that there are some temporary support points that could stop the break and slow down the momentum. This has been Autochartist Stock Index Market to Watch for Thursday, April 12, 2012.